Welcome to Assay TV. I'm Leo Stemp and I'm here at the One-to-One Mining Investment Conference in Cape Town with Nivaash Singh, who is the Head of Mining and Resources at Nedbank CIB. Nivaash, good to see you today.
Good to see you, Leo.
How's the event been for you?
It's been very good. We go through periods of activity and no activity. We're currently in a phase now where there's lots of new projects that are coming to market, and we're very excited about those. The trick now for us, Leo, is to pick the right projects to back and to see them through to production.
And what are your key criteria when you look at a project?
So the focus now is on the management team. The quality of the management team is key to our lending criteria. In the old days, we would look at science and geology and engineering. Those things are important, don't get me wrong, but the experience and the quality of the management teams behind those projects are critical for us to ensure that we have a successful mine in operation generating cash in order to repay its debt.
So you're looking for people who have experience building mines, delivering on time, all that sort of thing?
Yes, that's correct.
Are there any particular commodities you like the look of right now or anything you would avoid?
We particularly like gold, precious metals, only because you don't need a lot of infrastructure to take it to production. Unlike your bulk commodities where you're dependent on a railway line, potentially a deep water port, and lots of electricity. With gold mining, you do need electricity and you need a stable water supply, but it's infrastructure light. So we particularly like gold. However, there are other commodities like mineral sands that we are particularly comfortable with. Copper seems to be always the bellwether of economic activity in the world, so we like copper. And the other industrial minerals that we are seeing now for the first time, like rare earth elements and your exquisite commodities like lithium and graphite.
You mentioned copper there, and as a bellwether of economic activity. How's it looking right now? How's Dr. Copper performing?
So it's copper prices have remained relatively flat in the short term, and that's been I think subdued by excess supply in the markets. But when above ground stocks run low or run out, you'll find that there'll be a surge in demand for copper, and we have no doubt that will cause a run in prices. So we're very bullish on copper in the long term. And we're confident that it will reflect the pace of economic development in the rest of the world.
And you mentioned rare earths and lithium, obviously key for the development of e-vehicles going forward.
That's right, absolutely. We've been avoiding the rare earths and lithium graphite commodities for a while. We've come to realize, Leo, that we can't keep away from these commodities. We've got to pull up our own socks as debt providers and learn how these commodities work, and that's understanding its demand, supply, consumption patterns, and where the ultimate uses lie. The world is changing. You mentioned EVs, critically important, particularly in the developed world, and we now see a terminal market developing for commodities like lithium and graphite. They are fluctuating, so don't get me wrong, it's not going to be easy for commercial banks, but we're willing to invest the time to understand them in order to support our clients on the continent.
And how about the availability of finance at the moment? How deep are your pockets, and how's the availability of debt finance?
As a commercial bank, Nedbank has remained an throughout the cycle lender. We are open for business. We're willing to invest in the right projects. I can't say the same for the rest of the commercial bank sector. Lots of commercial banks have withdrawn from mining finance, given the high risks involved in the industry. We've seen a growth of alternative financiers in the market. We call them debt funds. They seem to be doing quite a pretty good job supporting the junior mining sector, but they come with additional covenants and undertakings that can, in the long term, be value eroding. So commercial bank debt remains the cheapest form of debt one can access in the market, And the message to our clients out there is, before you outrule the commercial banks as a potential debt provider, come and talk to us, and we'll be very happy to guide you through your debt raising process.
Fantastic. And is it just African countries that you lend, African country-based projects that you lend to, or?
Nedbank is an African bank. The continent is where we focus. It's where we play, and it's where we are looking for the right projects. And I would also go one step further to say that a message to the junior mining sector: a bankable feasibility study is not bankable unless it has a funding plan.
Sure.
So we encourage those companies that are on the cusp of releasing a bankable feasibility study to strongly consider thinking through a proper financing plan to make the project truly bankable.
Fantastic. So your message there to the mining companies is Nedbank is open for business, but if you come and see us, make sure you've done your homework.
Absolutely right.
Fantastic. Well, thank you very much for joining us here today.
Thank you
and
for
best
having
of
me.
luck for the year ahead.
Thank you, Leo.
Thanks.